Hope everyone's doing well and welcome back to another video. So cool. So today's one is going to be a midweek outlook. Of course, we are halfway through the week. It's a Wednesday. We've had the CPI pass today. So I just wanted to sort of, brush over what we're expecting. Now, we'll start off with two things, right? The two sort of immediate things that I have, already marked on my chart. Bring this over here, just for reference. And of course, up above, you guys can see the daily fair value gap. So cool. So, what's taken place so far in the week. So if we quickly just hop on a daily chart, we see Monday candles, inside candle hasn't really done much. Tuesday, good bit of displacement down, actually took out, this major sell side liquidity pool that we've been watching for a month. Why am I calling this, major specifically? One, it's a very obvious swing, right? Equal lows, clear sell side liquidity pool, but it's also the low of a previous monthly candle, like a actually previous rather than the exact previous, and it's hitting into new fair value gap, right? New monthly fair value gap / balance price range here. So, right, with us sweeping this on Tuesday and getting, somewhat of a move away, not exactly displacement away or a reversal, but, a move away, we began to question, is this the sort of low of the week, right? Is it possible we place it here? Now, you see, when we have areas like this, you have to ask yourself these questions. If the low of the week was to get placed here, right, would it be valid? Most likely, right? What I mean by that, or rather an easier way to sort of think of it, is if in the future we came back, right, and we looked at this week specifically and we said, oh, look, you can see Monday, Tuesday traded down, and then you swept some sell side that you displaced higher, and that ended up being the low of the week. That's probably something we'd use as a textbook example, right? So thinking along those same lines in the moment doesn't mean we necessarily act on it, but we start to build that expectation. Okay, the low of the week might be getting put in here. So as you guys can see, we come down to a lower time frame, or rather the 4 hour. We start getting somewhat of a move away. Nothing, crazy yet. We'll come down one more time to the 1 hour. And what we see is, we had a big consolidation, right? Accumulation, manipulated blow. And the expectation became that we were going to distribute this way, right? Paired with this sort of 1 hour schematic and the higher time frame bias, it was the expected move. And of course, we also have a very clear target to work towards with the daily fair value gap, all this, buy side trend line liquidity built up over here. So cool. So what's actually taken place? So of course, we've not engaged anything in the mentorship over the Monday and the Tuesday, right? In regards to EU and GU, not much offered, if I'm being honest. We could argue this was a bit of a London to New York OTE, but with entries like this, it's difficult. It's offered very early on in the session, and of course, price had already hit the sell side target out, so it was a sort of, are we going to trade lower? Is this the reversal? It didn't make for a great setup. Instead, my hopes were that we come into today, we have CPI will likely, continue that move higher and essentially place in the low of the week, or rather cement it, right? If this is going to be the low of the week and CPI is not sweeping the previous day, then this is sort of cemented and we're going to go higher. Now, as you guys can see, CPI is this 15-minute candle. The way this candle actually formed, this candle opened, massive push down, swept all of the sell side, then big push up, next candle moves a bit higher. After that, you get a bit of accumulation, you start getting a kick down, right? And then from there, not much else. Now, we actually were looking to entertain a setup around here today, which ended up being closed for about a 0.2, 0.3% loss. Nothing major, but essentially the idea was, look, you've got a massive range, you've got a mitigation block here, right? Price has now swept a lot of sell side, has displaced higher. Specifically, right, we're watching this 1 hour close. I really like the look of this 1 hour close, and I wanted to, the theory was that this low created by CPI will stay in place and will not get swept, right? Because this is the sell side sweep, displacement higher, and instead we can OTE it, right? Something along the lines of, let's assume you just enter there, the open, we cover the whole low, and we would have targeted, there's a lot of targets to work with, right? That would have been previous daily high. And of course, the overall target that we would have worked towards is actually the daily fair value gap, right, on the DXY. So now, as you guys can see, right, as this position began to form on the 1 hour specifically, price traded hard, pretty hard downwards, trading through the array, and then of course went straight to the stop loss. We actually managed to close this out. I believe the matching setup, take a look at it, we were trying to entertain on Euro USD, actually did not hit the sort of final stop loss, right? But again, I wouldn't change my decision. Let me just quickly frame it for you guys. We had it. We had the trade from here, wire here, essentially lining it up with this. The matching mitigation block had the stop loss at this high, and very similar to DXY. Very nice 1 hour targets to work with, right? But from over here, what's actually ended up happening is prices, sort of moved away, gone back up, started to move away again a little bit, but then this ended up being accumulation. Then price started pushing up quite hard. At around this time, roughly, it's coming towards the end of the London close kill zone. And what actually ended up happening, one thing that really put me off was the sort of 4 hour candle closure. Because to me, right, essentially this candle, if this is the candle where CPI is dropping and, we've started expansion down, I would like to see that next candle close, bearish. I would like to see it expand this way rather than sort of just trade straight back in the range. And if you match it up with the DXY, you can see, right, this was the CPI candle, and the way that closed is not great for a bullish case. We wanted a bullish case. Now the new candle has come, swept the previous candle, traded higher. So what I've said to the group chat is, guys, if a second leg is offered on the 1 hour, essentially if we go ahead and break this high again, then this is something that I would say, okay, cool, now it's likely we're going to trade all the way up here. But with a close like that coming towards the end of the trading day, CPI itself not giving a crazy push in one direction, instead just sweeping both sides, sort of sitting there, it just became a trade that wasn't as good to be holding through, right? But now the good thing is that because we were approaching it as a sort of intra-week swing, the stop loss was about 40 pips. As price started to move against us, and we had good pair selection, right? Euro USD was actually very bearish. So even though DXY was dropping this hard, Euro USD was not retracing, as deep and going up. So it gave us an opportunity to get out around that 0.2, 0.3% mark. So in essence, explaining that trade, I've sort of given you guys what the expectation is already, right? We have a 1 hour fair value gap that here. If we trade through this, it's likely we are going to be building the second leg of price action, right? So what I want to see are these highs blasted through. I want to see DXY trade through these highs. Second leg, it most likely will probably offer a 1 hour OT again, and we can then push again for this daily fair value gap in regards to our intraday trading. Now, we have our PPI tomorrow and unemployment claims in New York kill zone. That's where my eyes will go. And of course, on the Friday, we have some red folders as well towards the end of the day, right? So there's still definitely some gas left in the week, especially considering it's been very, consolidated so far to start the week off. This is where the week opened, right around here. And then this is just one big consolidation, one move, and then this is all sort of very consolidated as well, right? So the expectation, in my opinion, from here is for us to trade higher, especially looking at our daily chart today. It looks like we're ending up with a inside candle, but if we can trade higher from here to this daily fair value gap, that's when we can start reconsidering shorts. Up until then, in my opinion, there's nowhere clear for us to really entertain shorts from. We could consider something like, a run on this high and then displacement down, something along those lines. But usually when we have the buy side liquidity built up like this in this nice clear trend line, I would anticipate that price, will go ahead, trade through all of this, go into the fair value gap, and then we can reconsider the shorts, right? That's the sort of scenario we're looking at. Just quickly looking at the bond yields, what they're doing. So this high is actually previous weekly high. Guys, remember, this is the scenario we're looking for. We want to see a run on this. weekly fair value gap, very simple, very close to it, but we just want to see what price does when it reaches this. We're expecting price to sweep this and then offer that displacement lower. For GBP, very big turnaround, right, on the week. Definitely what saved us today, very big displacement lower, because that could have been very close to a 1% loss, but instead with price pushing down this hard, actually saved us. So from here, you know, what do we expect next? Especially coming off that daily chart, there's a very big fair value gap here. Depending on how today's candle closes, this is a sort of area I would expect price to work towards. From the looks of it, this is just one big consolidation, right? There's no high expectation of, you know, oh, this is the reversal and now price is gonna, you know, whatever. From here, the way we would play it, because it is a big consolidation, big range, is essentially just premium and discount. We've hit the premium, you've started displacing lower, so it's very likely you're going to work towards the discount now, you know, towards these fair value gaps. And then from there, it's likely we'll probably end up getting a reversal again, back somewhere up here, right? So play it short term, as we've been saying on EuroGP. Most of you guys watching this are probably intraday traders anyway, so, you know, you're already doing that. Not much to add on Bitcoin, you know, nothing crazy offered from CPI on here either, if I'm being honest. We have finally got that sweep lower. So the Monday, right, traded lower. Tuesday came and reswept, and then of course pushed a bit higher. So to me, this looks like a sort of, you know, this is just essentially a retracement current. And, you know, from these sort of swing highs to this low, I believe is the new range. And it's likely we probably head lower, right? I don't think the market's sort of ready for that reversal yet. And, you know, what I mean by that is it's sort of what we discussed in the weekly outlook, right? With crypto, there's a lot of sentiment building. There's a lot of manipulation in that regards to a lot of fear and greed in the markets. They build one side, go to the other, etc. And they like to take it to extremes instead of, you know, giving people a balance. So from here, I think there's a lot of fear, but I think they want even more fear. A lot more people capitulate if we keep going lower, especially, you know, we discussed if we start hitting those low 70s, and then from somewhere like that, a reversal would be great, my opinion. Wrong one. S&P, very interesting chart, right? Very strong move down. It is what we wanted, right? It is what we wanted to see price trade into this discount area, trade past equilibrium. And what we're seeing so far, price traded down here, but based off today's specific candle, CPI's candle, what it's suggesting, sweeping the previous daily high, if this candle closes any lower, I would bet, you know, we trade lower. We take that low once more. But as we said before, the sort of framework that we're looking at, you guys can see, I would say it's relatively clean. Initial accumulation, reaccumulations, you're in the discount. This is sort of prime time for SMR, right? Based on that daily close, like I said, it's likely we get another push. But when that move comes, I would expect it to be quite, you know, explosive, right? And I would want to see price give us a nice reversal, and then it will just be a clean market maker buy model all the way back to the highs. And it's also a higher time frame accumulation, manipulation, and expect distribution this way. But yeah, guys, that is it for the weekly outlook. I don't think, you know, we're in a bad spot by any means. I think last, what is it, let's say about 2 weeks, maybe 2 weeks, has been a bit difficult, right? From Monday the 3rd to Tuesday the 11th, which is near enough 2 weeks, has been straight down. Not 2 weeks, sorry, that's only a week. But essentially a week worth of daily candles, just straight down, right? Which makes it very difficult to trade when we're not getting retracements. And of course now, considering that, you know, even though our price has been straight down, we've met a higher time frame objective, the next logical thing to expect is a retracement, right? That is why we're betting on that. That's why we will be waiting patiently to see if that 1 hour second leg comes. From the looks of this hourly candle, looks like it's already gearing up to give us that. But, you know, hopefully keep going higher trades through this. Then you have a nice new low to use. And of course, you know, we can anchor this to whatever high is made and then aim for the daily fair value gap. But yeah, guys, that is it for the midweek outlook. As usual, any questions at all, anything I can help with, just drop me a message.